Gunjan, good morning. It's great to have you. So where have they gone, and how do you sort of square that with the increased activity we've seen in recent months, especially in meme stocks and some of the more speculative areas of the market?
That's right. I mean, it's been a fascinating trend seeing retail investing as a percentage of total stock trading activity fall to the lowest level since before the pandemic. However, analysts I was speaking to said that there did seem to be a comeback in the last few weeks of the third quarter. And that helps explain some of those huge moves that we saw in the ARK Innovation Fund, in the meme stocks. A basket of retail favorites surged around 20% within 1 or 2 weeks late in the quarter. And on top of that, a measure of out-of-the-money call options activity on stocks like the meme stocks, Tesla, Nvidia, Twitter, hit the highest level since early 2021. So we did see some of that activity come back into the market late in the third quarter, and late in the first quarter, and it is a sign that some of that speculation was returning to the market in recent weeks.
Right. Gunjan, at the same time, we've seen so much volatility all year in the NASDAQ. I mentioned a stat at the beginning of the show. The NASDAQ 100 has seen more than $1 trillion disappear from peak to trough each month. What is driving that kind of volatility?
That's such a good point. And I think that goes back to the mixed signals that we're seeing across the market, where on the one hand, you have the bond market recently flashing a sign that a recession might be coming. You have transportation stocks, which are typically a bellwether for the economy, saying, hey, maybe there's a global slowdown ahead. And then, as I mentioned, you have that intense speculation in pockets of the market. So I think that's a sign there's volatility in everything from tech stocks to transports going on.
Gunjan, how far are we off of normal now in kind of retail investor activity? So you say the lowest level since 2019, but it's been a crazy few years, right? Particularly in retail. So is this returning to more of a normal share of trading activity, or is it below that?
I think that's the big question, because there was a big shift for much of the first quarter. Yes, we saw those pockets of speculation come back late in the first quarter, but I think institutional investors too are keenly, watching. Will these investors come back? Will they keep buying these dips? And I thought one stat was particularly interesting. For the ARK Innovation Fund, the retail buys for that fund in March hit the second highest level on record and were well above 2021 averages. So, I think people are still tracking retail investor activity for clues on the market's next direction. And it'll be really interesting to see in the second quarter, do they come back into the market during this rebound that we've seen since March, or do they kind of stay on the sidelines?
Yeah, it's interesting. You're in a directionless market when you've got people arguing that central banks around the world are behind the curve on inflation. At the same time, others are arguing they should start preparing support measures in case growth really slows down. I noticed the B of A fund manager survey today talked about the Fed put today around 36, 37.
I know. It goes back to the mixed signals that we're seeing across the market. I will say, though, with investors I've been speaking to recently, they've all been saying, yes, of course, the probability of a recession does seem to have gone up. Everyone's talking about, stagflation, the prospect of a recession on the horizon. And 8 out of 11 of the past Fed rate hiking cycles have led to a recession. But I think when you zoom out, it's incredibly difficult to time that. Right? Is that 1 year away? Is it later this year? Is it 2 years away, 3 years away? So investors I've been speaking to are saying, look, maybe that is a possibility, but it might be too early to take our chips off the table and try to time that. How do you time that and actually position your portfolio for that? It could actually cost you money in the long run.